Welcome back to our weekly update. I'm Charlotte McLeod with the Investing News Network, and I'm here to give you a quick look at our top stories for the week. The gold price rose as high as $18.22 per ounce this week, but dropped off a cliff after the U.S. Federal Reserve announced its latest interest rate hike. By the time of this recording on the morning of December 15th, the metal was at about $17.88. The central bank hiked interest rates by 50 basis points on December 14th, as was widely expected by market participants. The Fed has now raised rates 7 times in a row this year, including 4 increases of 75 basis points. The target federal funds rate now sits in the range of 4.25 to 4.5%, which is the highest level since 2007. The Fed's aggressive upward push on rates has been a key element of its fight against inflation, and comments from Chair Jerome Powell indicate that it's not over yet. Speaking after this week's Fed meeting, Powell said that although inflation data from October and November shows a welcome reduction, he will need to see much more evidence before he believes it's on a sustained downward path. The most recent consumer price index reading came out on December 13th, and it shows inflation was up 7.1% year-on-year in November and 0.1% month-on-month. That's still well above the Fed's target of just 2%. For precious metals enthusiasts, the key question is what all of this means for gold. Higher rates are typically negative for the yellow metal, so continued hikes from the Fed aren't good news. At the same time, the US dollar continues to be a major headwind. With that in mind, we asked our Twitter followers for their thoughts on where gold will be at the end of 2023. The poll was ongoing at the time this video was recorded, but most respondents optimistically said above 2,000. As we wrap up, I want to give a quick preview of my upcoming interview with veteran investor and speculator Rick Rule. It's always great to speak with Rick, and with the new year approaching, I asked what sectors he thinks have the most potential in 2023. Those who follow Rick probably won't be surprised to hear that his industries of choice are uranium and oil and gas, although he said investors need to make their own choices based on their approach to the market. For income and value investors, he pointed to the Canadian oil and gas sector, while for speculators, he suggested uranium. We'll be posting the interview with Rick soon, so stay tuned for that. That's all for this week. If you like this video, make sure you subscribe to our channel and turn on notifications so you don't miss future updates and interviews. You can also follow us on social media or click below for our free report or any article mentioned in this video. See you next time.